Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is our last 3 days performance. Very impressive numbers. We'll get to those in a second. We're going to go ahead and switch it over to the chart of the E-mini S&P 500 futures contract. This is a front month looking at a last print of 745 after a very impressive 2 out of 3 day, we'll call it, move for the bulls. The first thing we're looking at here is our intraday dynamics. These are our proprietary indicators which suggests to us where the market is most likely to go and if moves actually have the wherewithal to continue. So the first thing we're looking at here is a half a day session on Friday, this Friday the 13th. There's Thursday, Wednesday, Tuesday, Monday. Monday, just a lot of red. Bearish, 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 bearish was across the board on Monday, as you can see. The market really just tried to make it higher, but just really couldn't get above the high of the late day close on Thursday or on Friday. We had that huge surge up, if you remember last week, which was kind of a precursor, suggestive the move was so powerful, suggestive that something was somebody knew something, and the fast money was certainly jumping in, covering some shorts, maybe even getting some long exposure. Definitely an elephant print right there, but predominantly the market was bearish. So on Monday, suggesting that there just really wouldn't be any follow through. The market did try and follow through, but just couldn't get above that high and trailed lower. However, Tuesday came, gap open higher, eclipsed the high of the prior day as well as the prior to late session on Friday. Full bullishness in our indicators, green, 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 green. Just a quadruple threat in bullishness. Higher market, yeah, we did get a close near the high of the day on Tuesday. And of course, we look at our indicators. We did get a higher move, a fall-through move on Wednesday. But it just wasn't meant to be. I mean, you see this extreme divergence. You have this acceleration. This is what we love seeing in either direction. Acceleration for the bulls right here, but it just petered out on the early session, suggesting this move higher from 710 to 730, 20 points, we'll call it, from the low of the late session the prior day. So 20 points just really wasn't going to hold, really weren't going to see any follow through. Definitely didn't want to be chasing that market. We did get the trail lower again, much like Monday, and got to close essentially unchanged, nearly unchanged. And because of the fact we did have bullishness here, but bearish, bearish, and certainly an extreme divergence here in this primary indicator that we have. So here we get another day. What do we see? Accelerating bullishness. Accelerating bullishness, granted not this day, but accelerating bullishness, bullishness here. So a quadruple threat bullish was the case here, suggesting once we got this acceleration here, you saw this acceleration here, suggesting that this move would have fall through. We actually had a bit of a bear trap, fell below the trend, turned red, switched back to green, broke back above the trend, and then started to accelerate under a quadruple bullish bias, we'll call it, in addition to eclipsing the high of the prior day. Once we got around there, boom, it was just off to the races, and another 20 points or so in the ES. So that's Thursday. Big moves, very nice moves. We love seeing them. Definitely have been participating nicely as a result in our portfolios, and we'll get to that in a second. But the market lasts now at 745. If you look, if we zoom in a little bit here, you can see we did have a higher session overnight. Quickly was eradicated. The move then, or the market then, tried to accelerate once more, but you really just couldn't chase this move right here to 755. And why? Because bearishness there, and certainly no indication of acceleration here in our primary indicator, suggesting that that the move just wouldn't really have any legs. And as you can see, the market went from 755 down to 745, where it's now struggling to hold not only the low of the session, the low of the early session, right there, but certainly the trend as well. So if we get a break, we're just simply not expecting any follow through given these underpinnings and the dynamics of the market. And but nevertheless, that's where the market stands right now. We're going to go ahead and look over at a chart of the daily right there. So we've actually seen some interesting developments. We went short around 13, almost 1400 from a discretionary basis. We went ahead and just said this market is too enticing to not at least jump into the bullish side. We held that position for probably a little bit too long, took a little bit of a loss, gave about 20% of our profits back, which wasn't bad, but we did switch to neutral. We actually didn't go bearish here on the break below. We had mentioned the entire time that once we saw a move back below 790, we would switch out of our bullish bias. We didn't go to bearish, we just went to neutral. But we've since seen some interesting developments. We did have a move down to a low of, we'll call it 670-ish, 660, 679. But what happened on this day, so right now, we're short-term bullish here in terms of momentum, intermediate-term neutral, short-term neutral in terms of directional movement, still intermediate-term bearish in terms of momentum, but this is an interesting hard turn. An HT setup, we always like to see hard turn setups. And this is certainly one that bears needs some attention. So what happened is, we're going to go ahead and scroll in here. What's interesting is this is one signal that we definitely love using to take some profits, and that's once we see this switch over. Once we see this switch back, the intermediate term is just continuing on, but the short term has just said nope, it's over, take profits. What happened was, what's interesting, it was very near the low of the day. So on this move right here, we did see the confirmation of two closes below and actually got another lower close in terms of that switch back, suggesting take short profits. Any short profits, take them. Close of 683.38 was the close. It's about 70 points lower than where we are now. So definitely was a great opportunity to take, if you were short on a discretionary basis, take your profits there at 683, and we've since seen a nice move higher as a result. Are we bullish? No, not yet. We already made that mistake right here, just getting a little too exuberant. I mean, just certainly an anomalous event was this move, and as traders, you definitely want to take advantage of these extremes. That wasn't extreme. It just based around and wanted to go a little bit lower. So are we bullish? No, we're going to stick to our methodologies and remain neutral for now. Once we get back above 800, certainly we'll move back to discretionary bullish. But we've talked way too much time about this. That's the market. Here's our 3-day performance. Very impressive were the numbers. Tuesday, 17% for Map Black, 33% and 35% for our main day traders, dual day trader, and Map DT was the gain. Again, gave some back on Wednesday on that choppy day. Thursday, very impressive numbers. 28% actually for Delta B. This all leads to very impressive numbers of Map DT putting in, this is the original, 43.15% for that portfolio, and 30% coming in third place actually behind the Delta B, which was the underperformer recently, but certainly now is outperforming. But nevertheless, they're true all. If you actually go and look at the longer terms, certainly the Map DT at 600%, dual day trader at 564%, which is still incredible numbers given the market that we've seen lately in the market. So if you're interested in either one of these portfolios, or you have any questions, feel free to go to the website, chat with the support team, or shoot us an email to admin@MiniAnalyst.com. And if you have any questions, but if you're interested in taking advantage of this great opportunity to get started, we're still putting in our part, and that is putting up an unprecedented special offer for the day traders. So we can actually scroll down to the Map DTs, and there's a Map DT version 2.0. We'll go ahead and add that to the cart, and what you do is any Map DT version 2.0, version 3.0, any Map DT, what you'll do is you'll save $500 by entering promo code VIDEO. So go ahead and enter that. Now what that's going to do is, we're actually going to extend this offer as well for the dual day trader. So if you buy 4, you get 1 free, and you can run them consecutive or concurrent. So you'll just put in 4 there. We're going to extend that. It's not extended right now, but you certainly do save $500 right there off of the Map DT. We can just go ahead and eliminate that. And there you go, $1,500 for any Map DT. We will see you next time. You guys have a great weekend.